Welcome. Good morning, good afternoon, good evening. Thank you guys once again for joining the 980s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 980s Capital Group. Thank you guys for joining us. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple Books. If you have any questions, comments, or concerns, you can reach us at www.980scapitalgroup.com. Schedule an appointment via email at 980s@9icapgroup.com. Send us your questions, comments, or concerns. If you want to listen to our YouTube station, go to that YouTube station and subscribe to the channel. Type in 980s Capital Group there. Or go to the iTunes station and subscribe to the channel. Type in 980s Capital Group there. As you know, we're here to do what? Educate, empower, and engage. And today we're here to educate you on the meme stocks. They're back. Let's get it. So we know what happened a year or so ago. We had these stocks that came out of nowhere, whether it be GameStop, Bed Bath & Beyond, AMC, just to name a few, and they were getting pushed to these outlandish levels. People called them meme stocks because, well, they were being pushed by memes, by Redditors, by chat forums. Large groups of individuals got on these chat forums and started saying, hey, stock XYZ has a tremendous amount of shares being shorted, which means people are wanting the stock to go down. And in some cases, not only were the shares being shorted, more shares were being shorted than were outstanding from the company that were available to the company. So what does that mean? There were over-levered hedge funds or over-levered financial institutions trying to get these stocks to go to zero because the company and their earnings or just get them to restructure. So groups and forums got together and said, you know what? Let's push these stocks the other way to make sure we can put one in the face of Wall Street. We're going to give Wall Street a black eye. Well, congratulations. That happened. There were a few hedge funds out there that kind of were on the wrong side of this, and it hurt them very badly. Absolutely. And there was a few institutions out there that had to lend them money to basically bail them out to keep them going, to make sure they didn't lose their investment. So it's almost like a domino effect. You know, one company has financing by one company, has financing by another company, has financing by another company. So they just didn't hurt necessarily just one company. They hurt a few other companies because all these companies are basically being financed by other entities. So the memesters actually won that round. But let me tell you where the memesters went wrong. Let me tell you how the memesters actually helped Wall Street make billions of dollars. First and foremost, let's just say hypothetically we have stock XYZ and it's trading for $5 and this company is on the verge of bankruptcy. Let's just say hypothetically it's heavily shorted and these memesters got in there and pushed my stock price from $5 a share to $200 a share. And by the way, how that happens is that the people that are short the stock have to buy the stock to cover, which means that when they buy the stock, they have to buy it on an uptick, and they're buying the stock. Every time they buy the stock, it brings in buying pressure from the company, from the exchange, and this just goes on and on and on, and the stock goes up. Now the memesters see that. Now they're going to buy the stock and push it even higher. And that's why you get these large spikes in these days. So back to my original statement, how did they get it so wrong? How did the memesters get it so wrong? Well, now my stock goes from $5 a share to $200 a share. And guess what? If I am an astute CFO of this company, I'm going to say, You know what? Let's do a secondary capital raise. Our share price is $200. Let's do a secondary capital raise. Hey, it's free money. We never thought our stock was going to be here. What does this do? It allows the company to raise money at a higher stock price that it would have never probably been at in the near future. Quick capital raise. Boom. You helped the company. Congratulations. You did that. 2. Now, what have you done to the shareholders who were owners of this company? If they didn't sell it, which again, that's dependent on what side you're on. But if you didn't sell the stock because you thought the stock was going to go from $5 to $1 billion, or maybe you got in too late, maybe you got in at 200, and now you're waiting for the stock to go to 230, 240, 250. Well, it just didn't happen. Sometimes, in some cases, it went to 400 in some of those companies. But now they did a secondary raise, and guess what? Boom, that stock gets hit. Why? Because you're diluting the shareholders. You're diluting the shareholders. You're putting more shares into the market, and you're raising capital. You're diluting the shareholders. So now you see the stock start going down. Strike one. Wall Street, meme stocks won, Wall Street won. Let's talk about 2. I'm the CEO and executive of the company, and I have stock options. Guess what? Oh man, this is a great opportunity for me to exercise and sell. I'm going to exercise my options and get out of here. Guess what? Now my stock went from 5 to 200. I'm exercising at 200. I'm getting out of here. Guess what? I make millions of dollars as the executive from the company because you guys, the memesters, give me an out. Executives from these companies can say, you know what? I'm out of here. I'm selling my shares. Boom, I make a great payday. And whatever happens to the company happens to the company. I have nothing to do with it anymore. And guess what else you just did? You further diluted the shareholders because the executive now puts those shares back into the market. Boom, strike 2. Memesters 1, Wall Street 2. So you've had secondary offerings from the company raising capital. You've had executives from the company selling their shares, getting out at higher prices, higher values, making millions of dollars. Great. Thank you, memesters. But that's not even the worst. Now you have all this dilution out there, all these additional shares out there, and an elevated stock that should never have seen that value, I don't know, in the near future or in the interim. Now, what do you do when you offer multiple additional shares into the market? Oh, it gives the people, the institutions, the hedge funds, the ability to sell what? Short, once again, at higher asset values. Now they have more shares to short at a ridiculous price. Boom, strike 3. And now they're going to make money. Some of them made money even on the upside when they saw the rips, when they saw the opportunity. But a lot of them are going to make money on the downside when they say, this is free money. And whose money are they taking? They're taking yours, the retail investor. They're taking the shareholders' dollars. They're taking your wealth from you. Wall Street is winning. Wall Street, capital raised, diluted the shareholder. Wall Street, executives sold their options and their stock options and made millions of dollars. And Wall Street is just basically getting on top of your high asset value and shorting the company again. And guess what? The broker dealers are not allowing you to short these companies. Or if they are allowing you to short these companies, guess what they're doing? They're putting ridiculous margin requirements on your dollars. So who really winning here? Was it the memesters or was it Wall Street? I would say Wall Street won. Yeah, maybe a hedge fund or two may have imploded or had some issues, but guess what? There's more capital that comes in on top of that, because guess what they're going to say? Hey, you know what? I know you guys had a good short position, and you have an opportunity here. We're going to give you guys more capital raise. You're going to go ahead and do it again at 400 or 450. What happens to the memesters? Some of them made money. Some of them, not all of them. Some of them made money. Most of them did not. Somebody's left holding the bag at $200 of XYZ company. Somebody's holding the bag of on that one stock we know at 457. Somebody's holding the bag, unless you didn't sell it. I hope you're not that one person. So when I say this to you, I'm not saying the meme stocks got it wrong. I just want people to understand the memesters' position towards Wall Street, and how Wall Street could take advantage of them not knowing how the system works. Thank you guys again for joining 9 Capital Group. Please subscribe to the channel. As you know, we're here to do what? Educate, empower, and engage. And today we talked about the meme stocks. They're back, and the meme stocks, how they got it all wrong, and Wall Street won. Appreciate your time. Appreciate you listening. As you know, we love you. Stay humble, stay safe, and we'll see you guys next week.